Hello, everyone. My name is Teresa Steinkamp. I'm the advising director at the Scholarship Foundation of St. Louis. My pronouns are she, her, hers. And this workshop is regarding tuition payment plans. I want to just start by talking a little bit about the names of tuition payment plans. So it might seem strange, but there are a variety of different ways that these things are referred to. So if you haven't yet found out whether or not your college or university offers a tuition payment plan, part of it could be because they're using a different name. One example is a monthly payment plan. Schools oftentimes refer to these with the language installment. So it could be tuition installment plan or a monthly installment plan. Many colleges will also say it's a 9-month payment plan or a 10-month payment plan, and they will be specific with the payment plan regarding the number of months to pay the balance in full. And increasingly, colleges will use some kind of branded name for the payment plan, which specifically includes the name of the college or university, perhaps even the mascot or something along those lines. And so the purpose of sharing this is to just clarify that there's a lot of variation with regard to how these things are called. And it may be helpful to search a variety of different terms on your college's website to locate whether or not a payment plan exists. And if upon searching the website, you're still not able to find information about whether or not they offer one and what the parameters are, we would recommend that you contact your college or university. There are some important things to consider as you determine whether or not a payment plan is available and whether or not it is the best course of action for you and your family. The first thing to assess is whether or not there is a deadline to enroll in the payment plan. At the vast majority of colleges that have a payment plan, there is typically a deadline by which you need to enroll in it. In my experience, these deadlines are oftentimes in July or August. And so it's important to understand what is the deadline, how do I need to get signed up and registered for the payment plan, and to make sure that you are taking care of all of those steps well in advance to meet whatever deadline. Because if there is a deadline for a tuition payment plan or an installment plan and it passes, students may find that they have to pay the full balance for the semester in full, either before the semester begins or very early in the semester. The second thing to determine is whether or not there's any flexibility in the number of payments each semester. So we're going to look at two examples of installment plans for colleges here in Missouri in just a little bit. And one of the differences between the two is the number of payments that are available each month. So in one case, it's 4 each semester, not each month, each semester. So in one case, it's 4 payments each semester. And in the case of the other institution, it's 3 payments each semester. But that can mean that if it's a fewer number of payments, it may mean that it's a larger monthly payment. And so it is possible that it would be easier to make the payments if they were lower each month, even if you have to make more payments over the course of the semester. And so it's important to understand whether or not there's any flexibility in the number of payments that are required each term. You may also want to find out whether or not payments are automatic. So it may be that you have a choice whether or not it's automatically pulled from a bank account or charged to a debit or credit card. It may be that you can go in each month and schedule the payment closer to the due date. But there are a couple of things to consider with regard to automatic payments. So if the payments are automatic, you of course want to be sure that there's sufficient funds in whatever bank account is being used to pull the payments from, so that that the payment can be covered. You may also want to set reminders, and if the payments are not automatic, you still want to set reminders because you want to be sure that the payments are made on time, because there are oftentimes late fees and finance charges for late payments, but we'll talk about that more in just a moment. Payment plans typically have fees and interests that are assessed, and so the finance fees could be automatic. You may not have a choice to avoid those. And interest may also be applied, particularly if the payments are late. So you want to understand how the fees are structured, what kind of interest may be applied to the balance and under what circumstances, and then determine how much additional money that's going to cost you over the course of the semester or the academic year. And then finally, you want to know what happens if a payment is late or missed altogether. So this is very closely tied to the piece above, which is regarding fees and interest. At many institutions, there's a late fee assessed if the payment is late, and there are some pretty significant consequences for students if a payment is altogether missed. And so it's important to understand those consequences and do what can be done to avoid them. As with almost anything regarding paying for college and college affordability, there are some cautions with regard to payment plans. And so we want to encourage you to think about these things and to be careful as you make a decision regarding a payment plan and whether or not it's the best course of action for you and your family. So the first is limited flexibility. If you consider the volume of students that are likely enrolled in a payment plan at most institutions, there's not a lot of flexibility that schools are in a position to offer. So there's typically not the ability to change or adjust the due date. The due date is going to be the same for every student across the university each month. And we'll see that in some of the examples that we look at. There may not be much flexibility with the number of payments that are required each semester, and there may not be much flexibility with other aspects of the payment plan. And so you want to understand what the parameters are and whether or not those parameters work for you and your financial circumstances. Most payment plans actually have an enrollment fee. So it's an additional cost that you need to consider. What is the enrollment fee? Is that a burden? And if it's a burden, is there another way to ensure that the costs at your institution can be covered? It is also worth pointing out that not all schools have a payment plan. So in my experience, they're fairly common, but they are not universal. And so it would be important to know if it is something that you are considering or something you are hoping to take advantage of as you participate in the coming academic year, whether or not your school offers one. And if they do not offer one, you want to consider what are the alternative options, because again, if there's not a payment plan, they may expect that the full balance of the semester will be due at the start. We have seen where some institutions will drop students from their courses before the semester even begins because the bill has not been paid in full. And so it's important to explore all of those options and pieces with your institution. It sounds a little strange, but how you make these payments matters too. And so I want to just remind all of us that there are a couple of different ways that payments could be made. Although it's unlikely that most of us would be paying with a check is a way for students and families to make payments on their tuition. Most families would be mailing a check to the cashier's office at the college. It is also possible that you can physically drop off a check at the cashier's office if you are attending your school in person this year and have the ability to make that payment in person. For a lot of students and families, they may use ACH debit. And so this is where the payment will come out of a bank account or be applied to a debit card automatically on a specified date each month. ACH debit is fairly easy because the payments are typically scheduled and automatic and you don't need to think about it, other than the fact that making sure there are sufficient funds in the account to accommodate the payment when it hits. So ACH debit is likely going to be a popular option for many who would participate in a payment plan. But there are some folks who will also use a credit card. And so there are some cautions with regard to using credit cards. At a lot of schools, there may actually be an additional fee for using a credit card. And so you want to understand whether or not there will be any fee assessed for using a credit card to pay on a tuition payment plan. And then, of course, it bears being careful using a credit card if you're not going to be able to pay the credit card balance in full by the end of the month. Interest and fees that are applied on credit cards are significant, and it will add a great deal of cost for a student if they are having that interest applied on a credit card in addition to the balance that they are paying through a tuition payment plan. So these are just a couple of different ways that a tuition payment plan may be covered or how the payment could be made. All right, so we're going to take a look at two examples of information around tuition payment plans. And we're going to look first at the University of Missouri and second at some information for Missouri State. And we selected these schools because these are two institutions in Missouri where the Scholarship Foundation supports a lot of students, both in applying and navigating the path to be able to be an enrolled student there. And we support a number of students at each of these institutions through our loan and grant programs. So I want to highlight a couple different pieces on this first image from the cashier's office website at the University of Missouri. So I want to first highlight that this is the cashier's office. And so although some institutions have different names for some offices, cashier's office is pretty consistent. Sometimes it could be the bursar's office, but this is typically going to be the place where students and families go to make payments. So if you are looking for information about a tuition payment plan at your institution, it would be valuable to start with the cashier's office. You'll see here they have some language about paying your bill. So we're going to look more at some of the detail that's included here, but I want to be sure that you see this icon that says pay your bill. And so if I were enrolled at Mizzou and I was ready to actually make a payment on my bill, I would be able to click on that and would be taken into my school portal and would ultimately be able to navigate to a place where I could make that payment. And so then they have an outline here of the minimum monthly payment schedule. So at the University of Missouri, you'll see that in the fall and spring semester, students have the ability to make 4 payments. The first payment is essentially the first quarter that is due for the full semester. And then by the 4th payment, the full amount that is owed for the semester must be paid. So for the fall semester, the full term has to be paid in full by November 10th. And for the spring semester, the full semester's balance owed has to be paid by April 10th. In the summer, there are 3 installments and it would have to be paid in full by July 10th. So you'll see in the highlighted portion, the language here indicates that every month the bill is run on the 15th. That is emailed to the student. And at Mizzou, there's something called this authorized access user. And so that might be a parent or guardian or other person. They will also receive an email notification indicating that the bill is ready. But the payment isn't due until the 10th of the following month. And so at that point, it may be that it's pulled automatically from a bank account. It may be that you, the student or the family, need to go in and schedule the payment or make the payment by that date. And again, you'll see that every single month the payment is due on the 10th. Mizzou has a lot of additional information that bears reading through when it comes to their payment plan. So first, they provide some information about the finance charges. So you'll see that they assess a 1% finance charge if a balance is not paid in full. So this fee is based off of the previously billed balance. It is not assessed to currently billed charges. So it's essentially things that are in the past, that are from the past. They also outline what happens if you miss a due date. So these are answering some of the questions that we encouraged you to think about as you were assessing whether or not a payment plan is right for you. So at Mizzou, for individuals who might miss a due date, there is a $10 late fee if the required minimum payment is not met by the date on the statement. They also indicate that there are some additional consequences that students could face. So you'll see here that the transcript could be held back for the student or their diploma could be withheld. And it also indicates that students could be prevented from registering for classes or adding classes to their registration. And so at the Scholarship Foundation, we know this practice to ultimately become something called a back balance. And a back balance is a balance owed for a prior term or semester, and the holding of transcripts and the preventing of registration are both very common practices at institutions all around the country. This is not unique or specific to the University of Missouri. This final piece, so this is very cumbersome language. Mizzou refers to it as delinquent indebtedness, which is complicated, but essentially what it means is if the debt owed to the school, so the balance owed to the school has become delinquent, they outline what can happen. And so there's a lot here, but it's important to point out that, and again, these things are true not just at the University of Missouri, but at other institutions as well, that the university will follow up with the student in a number of ways: phone, email, like physical mail as well. They may ultimately refer a student to collections and potentially even have an attorney pursue litigation. So in the event that a balance is sent to collections, it can mean additional fees through the collection agency. And so that adds to the expense. I also, when I was preparing for this conversation, had not realized that that this even existed, but the University of Missouri also has this language here kind of in the middle of that second to last paragraph that says the Missouri Department of Revenue's debt offset program can be used to intercept state tax refunds, which essentially means that if a student or a graduate owes the University of Missouri, it is possible they can work through the Department of Revenue to have an individual's tax refund from the state sent to them instead to satisfy some or all of this payment. So again, it's important to understand the consequences of what can happen when a balance is owed to an institution and not paid in time. So we're going to next look at the payment plan information for Missouri State. So Missouri State first outlines eligibility, and I found it interesting that it is not just students who can participate in payment plans. So they also indicate that staff and faculty can as well. So this would be for tuition and fees, residence hall charges, and there are a number of other things that students and other individuals can charge to their account that can ultimately be included in a payment plan. They then outline the repayment terms. So at Missouri State, there are 3 monthly installments. So in the fall semester, it would be September, October, and November. And in the spring semester, it's February, March, and April. And in the summer, there are only 2 installments. So this is reflecting back earlier in our conversation, it might be harder for some students and their families to make only 3 payments because the 3 payments might be substantially higher. And it would be worth exploring with the university whether or not it was possible to stretch it out to more, or do you need to make a payment before the payment plan begins to bring down the total amount that is owed over the course of the semester, reducing the monthly payments over the payment plan. And we will look at the example in just a few slides. So there's a lot of information on their website about finance charges and what happens with regard to missing a payment. So first, with regard to the finance charges, it is also a 1% rate on the remaining balance. I found it interesting that Missouri State specifically indicates here in their language that they have the right to modify or change the finance charge rate for subsequent semesters. So this is a valuable reminder for all of us not to assume that things stay consistent from one semester to another or from one year to another. This is currently the finance charge that Missouri State uses, but it could change in the future, and that is true for any institution. So for students who may participate in tuition payment plans over the course of multiple years, you would want to read the fine print every year to ensure that if any information has changed, you understand how those things have changed and what has changed. With regard to the amount that is financed, so again, Missouri State has some really specific information included here. So not only can students have their tuition and fees and their housing charges applied here, but if I were a student that went to the bookstore and added my fall semester books, that could be added to my payment plan. If I got a parking permit to park my car on campus, or I got a library fine from an overdue book, any of those things can be charged to my student account. And so ultimately they could be added to my payment plan. So my payment plan may start one way, but if I have additional charges accrue over the course of the semester, it may be that my second and third installment payments are actually higher than the first one. And so it's important for me to be paying attention to those things. And so my minimum payment may change. And so they outline some information here about minimum payment. So they calculate the initial minimum payment based on the total charges due at the beginning of the semester divided by 3, which is their at least their published number of payments that are made over the course of the semester. And then they add the finance charge. And that will be a little bit more clear when we get to the example. But again, the amount could change if I have additional charges that are applied to my student account over the course of the semester. So It's not always a lot of fun to think about what are the consequences of not paying, but it's important to understand them. So they outline here what happens if I were to fail to pay. So if I don't pay, any amount that is owed at the end of the semester will be billed in full, and I'm responsible for repaying that immediately and before I can register for the next semester. So they have some clear language in here about the fact that a past due account will prevent a student from being able to register for the next term. It will also prevent students from being able to receive official transcripts, which students may need for things like renewing their funding with the Scholarship Foundation or transferring to another institution if they decide they'd like to go to another school, applying for graduate school. So it's important to understand that. And they do also indicate that ultimately a student's balance could be referred to collections as well. And so some of that is outlined further in the default section. When they are past due, the university can begin collecting on the account, and they can ask or require the individual to pay also any fees that were paid to a collection agency, as well as attorney fees and court costs. And even bankruptcy will not necessarily prevent an individual from having to come back and pay the balance owed on the account. And again, Missouri State is very clear in their language for one reason or another that they reserve the right to make changes to any of this at any point in time and without advance notice. So I think that bears just a little bit of caution and understanding when students are thinking about whether or not a payment plan is right for them. So finally, this is the example of Missouri State's My Payment Plan. So I want to highlight, so there are 4 columns here. The second column is the principal amount. So in total, the principal amount that this individual student has to pay for the semester is $10,000. That's a pretty hefty amount and may not have much factor in aid that a student could otherwise be receiving. But again, this is important to pay attention to because $10,000 over the course of the semester and divided into 3 installments is $3,300. That's a significant amount for an individual to pay each month for 3 consecutive months. And then again, 3 consecutive months in the following semester. So the principal amount is $10,000. You'll see where they've factored in the finance charge. So there's not a finance charge on that first installment, but there are on the second and third. And so the total amount of the finance charge is $100. And so essentially the individual is paying $10,100. That assumes there's no additional late fees or other finance charges added due to having a late or a missed payment. So every individual student's potential balance owed to a school is going to be different. Again, this is an example of a payment plan. The last 2 things that we have looked at are both examples. And so your actual details with a payment plan could be very different. And we would encourage you to explore those with your institution or your prospective institution to understand what is best for you. I want to just close with some tips or some recommendations as you consider whether or not a tuition payment plan or installment plan is best for you. There are some things that you want to explore with those in your life who you trust to give you good counsel. And our team of advisors would be happy to be a resource as part of that conversation. So the very first step is to ask the college about payment options. So if you're not yet sure whether or not your school offers a tuition payment plan, if you're not sure all of the potential flexibilities or options within that payment plan, you want to speak with your college as soon as possible, especially if there may be a deadline to get registered and signed up for a payment plan. This is important with anything in higher ed, especially when it comes to the financing aspect, but read the fine print. We realize that some of those weedy details can be a little bit overwhelming, but they're really important to read and understand. And if there's anything that's not clear or that you don't understand and a member of our team can help, we would be happy to do so. It's also important to understand and to be realistic with yourself if you can afford the payments. So going back to the example with Missouri State, $3,300 is a significant amount for the vast majority of families to be financing each month. And so it's important to have an honest reflection for yourself and an honest conversation with your parent or guardian or anyone else in your life who's helping to support you with your educational journey to determine whether or not the payment plan is a right is the right option for you or the best option for you, and to determine whether or not that payment is realistic. It might be possible to make the first installment, but what happens if you're unable to pay the second and third installment? And so, again, just having an honest reflection with yourself and conversation with others about whether or not the payment plans are affordable. And then finally, really just ensuring that you understand fully the consequences of non-payment. So we mentioned earlier the term back balance. And so back balances can occur a variety of different ways. And although tuition payment plans seem like a great way to stretch the amount for a semester, the amount owed for a semester over several months and make it easier to pay, it is not true that every student who participates in a payment plan is able to pay the balance in full by the end of the semester. And so you want to understand what are the consequences of non-payment before signing up for the payment plan, and making sure that you can work to avoid those consequences. So finally, I just have the information for the members of our student advising team at the Scholarship Foundation. My colleagues Felipe, Dominisha, Robert, and I are all eager to do what we can to assist you. If you have questions about tuition payment plans or really anything with regard to paying for college and accessing college or matriculating through to graduation, we would be happy to do whatever we can to assist you. Our email addresses are listed here, and we look forward to being in touch with you. Thank you so much.